everybody, and welcome to another Modern Farming podcast here with the Green Gene Foundation, where we're always cultivating agricultural excellence through education.
We're your hosts, Chris and Tara, and together we're growing knowledge in the world that feeds us.
That's right, Tara, and today we're definitely going to grow some knowledge. We're going to grow some financial knowledge from our guests. So something a little different than soil and water today, and exciting guest on our.
Yes, today we have Rocky Malphurs with Edwin Jones Investment, and we're really anxious to hear about what he can offer us and to tell us about his company. Welcome, Rocky.
Thank you guys for having me. It's a pleasure to be here.
Great. Hey, Rocky, tell us a little bit about yourself, and then if you would, you have an interesting story about kind of the reigning president of Edward Jones and his history in agriculture. So if you could do that, that'd be great.
Yeah, one of our founders from a few decades back, actually. But my name is Rocky Malphurs. I'm a financial advisor with Edward Jones. And basically, I started my journey back in 1991 when I got my various licenses for both insurance and ultimately, some securities licenses. And worked with Metropolitan Life at the beginning of my career. In the 90s, that decade sandwiched between the awesome 80s and the new millennium, right? So I started out with Metropolitan Life, and then I ultimately opened up my own insurance agency, full services agency, right here in Brevard County, in Titusville. And I was a client of Edward Jones long before I became an advisor with Edward Jones, and there's reasons for that. My advisor took really good care of me, and I learned a lot. And eventually, when I sold my agency and had the opportunity, I could think of no place else I'd rather be than an advisor with Edward Jones, and ultimately right here in Titusville, Florida. Now I work throughout the state. I work up and down the East Coast. So I'm constantly, on the phone or on the road. I've been married to my beautiful wife, Jane, for 34 years. I better get that one right.
Important.
Two incredible daughters, awesome daughters. One of them right here in Mims with my two grandsons. Yeah, it's been a fantastic journey serving the people of Brevard and Volusia County, Seminole County. A lot of them are agriculturally based employees or owners, and this is home sweet home to me.
Cool. So can you tell us the story of I believe his name was it Tom?
Ted Jones.
Ted Jones. I'm sorry. And his background in agriculture.
Yeah, the story goes that Edward Jones founded the brokerage in 1922, St. Louis, Missouri, and it was just an independent brokerage. His son took over eventually, and his name was Ted Jones, and he's kind of the one that started the process of building the Edward Jones brand into what it is today. And he was a farmer. He absolutely was a farmer. He owned a farm, and that was his first love. And a lot of times, when we're in this industry, financial services, we talk about finding your rich. What is your rich? What do you consider makes you wealthy and rich? And these are the words of Ted Jones, and I'll read them to you. And these words are, all over the home office out there in St. Louis. But this quote's from Ted Jones, who ran our company for decades, and this is what he considered his rich. I am the richest man in America. I have a wife who loves me in spite of all my faults. I have 4 dogs, 2 who love me, 1 who loves everybody, and 1 who loves no one, but is still very loyal. I have a horse I love to ride around the farm, and best of all, she comes to me when I call her. I have too much to eat and a dry place to sleep. I enjoy my business. I love my farm and my home. I have a few close friends, and money has never been my God. And that is the words of one of our founding fathers, Ted Jones.
Awesome.
That's
Awesome. That's a
awesome.
wonderful story.
Mhm.
Yeah.
I think you could hear a lot of farmers that would recite that, and they have nothing to do with,
Yeah.
financial institutions, but that sounds like a farmer's
Yeah.
measurement of rich, not a financial
Right.
planner.
And I think that back in those days, these, the founding fathers of our company, it was the farmers that they marketed to, just driving up their driveways, knocking on their doors and building the business organically in that fashion. And it served a lot of the Midwest farmers and branched out from St. Louis.
Amazing.
So.
So, Rocky, I know that you've been in this financial service for many years.
Mhm.
What drew you to the farmers and ranchers portion of it?
Well, I think just growing up here in Volusia County, having an insurance agency here in northern Brevard, Titusville, you engage with guys and gals all the time who are making a living, working on a farm or working on farm equipment, selling farm equipment, servicing farmers or the needs of farms, Christmas tree farms, honeybee farms. And it's just kind of a natural market around here. My niche fell into more of a rural and agricultural community, just naturally. And being in this area. So the Florida Farm Bureau does a very good job with providing a lot of the property and casualty insurances. My job was to try to find things that fit into the weird insurance categories, like little cottages, little park model things, properties, various kinds of insurance when they couldn't get insurance elsewhere. So that's how I kind of got involved there. And of course, I've been an insurance agent in agency owner in this area for, I think it was 17 years total. And then another 10 years before that as an agency manager down in Rockledge. But you just get to know people. And I grew up in this area, so I'm no stranger to, the mentality of those who work with their hands and work for a living, commercial fishermen, and the support staff of the agricultural business, dump truck drivers, that's kind of like where I feel most comfortable myself.
Well, that's good. You got to stick with what you know, what you do best. Obviously, you've been around for a long time, so you must have found that niche, like you said.
Mm-hmm. Yeah.
So when you're working with folks, especially these, agriculture and trade, let's talk a little bit about kind of the strategies you talk with them. They're very unpredictable. A lot of times, unpredictable lifestyles or job styles, right? They're weather can hurt farmers pretty bad. Construction and building and things go up and down. What kind of work do you have to do to help them, navigate these with your strategies?
Yeah, keep in mind each and every person is an individual, so we do a pretty in-depth conversation. It's just a conversation, we sit down initially and we just talk in reference to what's important to you, what's your goals, where are you finding things difficult in your current situation. I think, like Chris was saying, money's going to come in chunks. Money's going to go in chunks, right? So a big part of that is probably having some liquid assets handy, to the tune of, depending on who you talk to. I like to say for farmers, 6 to 9 months reserves. You can get away with 3 months, I'm sure, but 6 months seems to be a sweet spot for cash reserves, right? And when I say cash reserves, I'm not talking about an aggressive growth mutual fund. I'm talking about something like a money market or some sort of a cash equivalent, whether it's within your business accounts or your personal accounts. So the conversation also goes to, and I might be answering more than one question here, but it also comes down to money comes and goes, catastrophes happen. We all been through hurricanes. We've all had losses in reference to natural disasters here in Florida, not to mention floods. I can only imagine flood would be absolutely devastating to someone who has a traditional style farm or ranch for that matter. So a lot of times planning for your own personal future, the future of your business, through your business accounts and your established business long-term savings, or just your own personal long-term savings, can get pushed back, right? I mean, the needs of the day certainly outweigh the needs of 20 years from now sometimes. But what we need to do, both as the financial advisor and the client, we need to find that comfortable spot. What's easily done? What can you do on a monthly or quarterly or annual basis to add to your cash reserves or some long-term investment programs? Okay, so you definitely want to think in terms of retirement and long, 20 years from now, 30 years from now, if your runway allows for it. Like for me, it's not quite 20 years anymore. It's more like a 8 or 9 year span. But we go into questionnaires, risk tolerance, things like what is your short, long-term goals, so we try to dig in and do a deep dive into what would best serve you, Chris, you, Kara, that kind of thing. As far as a blanket answer, I would think that agriculturalists, ranchers, support businesses, we just need to find a common ground where they can put some money aside comfortably for the long term, and obviously put money aside for the short term. And let's make sure we fill that space first, fill that gap in, first, and then we can expand on that. I know I rattled there. Did I answer?
Good answer. Yeah.
Yes. No. Yeah. I was just looking at like some of the vehicles that you have to guide people in retirement. Tell us about some of the things that you offer a lot of clientels when they're talking about long term.
Mm-hmm. Yeah. When we start talking about long-term investments, obviously, generally speaking, retirement planning, right? We have the Roth IRA is what I've been talking to people about mostly. Yeah. The traditional IRAs and 401ks are fine. Sometimes they serve a very good purpose, and you can deduct what you invest up to a certain amount in a traditional IRA from your taxes that year. With a Roth IRA, you don't get to do the deduction on your taxes, but what you do get, since you've already paid taxes on what you put in, you get all that money back later down the line, like during retirement age, along with the growth that it's created, the interest, dividends, capital growth. So you can pull all that money back out without paying taxes on it, right? Whereas in a traditional IRA or 401k, you don't pay taxes on it as it goes in, right? So it's never been taxed. So when you pull it out later down the line, you're paying taxes on what you've invested, the growth, the interest, and dividends. So it's kind of a trade-off. Pay a little bit of taxes now on your deposits, and then get it all back later down the line without. And there's other advantages as well with the Roth IRA. So it's good advantages in reference to required minimum distributions are not quite as strict. You don't have to worry about that so much. And but they're both great. They both serve a purpose. We like to talk to people in terms of the Roth now, but traditional IRAs obviously serve a purpose as well. To answer your question a little bit more fully, we do have retirement accounts. Managed money is kind of a new. It's not really new, but it's kind of the trend in investing now, where you invest in some of our programs, and we help you manage the money, or we let other programs we have. We just let the analysts over in St. Louis do the heavy lifting on where your money goes, and the research analysts and that sort of thing. So it depends on what the individual wants. Sometimes they want to take control of their investments, and they want to steer the boat, right? Some people, there's another program we have where, we both kind of steer the direction of the boat. We work together, and we figure out together what's best
Right.
Direction. And then there's a third way where we both kick back and we let the analysts and the advisors at the home office steer the boat and do a really good job for us in that fashion. So it just depends on your level of involvement.
Right.
Mm-hmm.
So I'm seeing a couple things here that I don't know the acronyms, so maybe you could explain them to us. So I'm seeing things called SEP and Simple. Is that what you were just talking about, or are those something slightly different?
No, that is different. Before was more geared towards individuals. SEPs and Simples are simplified employee pensions.
Okay. And
simple IRAs, which is also both of those programs are designed for your business and for your employees. So for smaller companies and smaller organizations, we will usually choose something like a SEP plan. Like for my insurance agency for many, many years, I invested with Edward Jones through a simplified employee pension. Very simple concept, very easy to manage from both the owner's point of view and the financial planner or the financial advisor's point of view. Those are plans designed to for you to offer to your employees, and you can do matching. You can do various, it's through the business. So it has the business aspect of advantages for your taxes, and, running their contributions or their matches through your business. And it's designed to allow for you to make an offer to your employees to help them with their retirement.
Okay, cool. So it's like
it's like a 401k for a big company.
Yeah, it's like a big corporation 401k, but it's helping smaller small companies or farmers or whoever have small amount of employees to do the similar thing. Okay, I didn't know that. I didn't realize that.
Yeah, these things are designed to be simple and efficient and quick for small business owners to say, hey, I've got these two guys or these people that have worked for me for 3 or 4 years, want to start helping them out. What can I do to not only keep them as employees, but, kind of reward them a little bit and keep them around and help them get their own retirement portfolio going. And we do that as well, of course.
Well, it's a good thing to have, because if you're small time, business and you're competing with other small time businesses to get employees, if you have something like that, that might draw someone that you want away from someone who's your competitor. Yeah.
It's definitely a perk. And, in the agricultural business, your farm and your people on the farm tend to be a lot more like family sometimes. You get to know people that you work elbow to elbow with a little more intimately sometimes than other organizations would. So yeah, a lot of times making an offer or helping an employee fund their own retirement, through a matching, like a 3% matching. Hey, you put in 3%, I'll match you 3%.
Who doesn't like that, right?
Yeah.
And then it's good for you on your taxes,
Sure. Sure. It's a way to alleviate your taxes of your business.
Corporate taxes, I mean.
Everybody wins. Yeah, everybody wins in that situation.
So tell me, I'm kind of curious about like what you offer to families, like say grandparents that were trying to help out their grandkids with education. Do you have some suggestions there?
Absolutely. And we do what's called 529 college savings plans, which are designed specifically for what you're asking. It's so that a parent or a grandparent can, they operate a lot like an IRA, except for when your child is old enough, they get to use the money for college related things.
Okay.
And it's a pretty detailed, it's a pretty extensive list of things they can use that money for. And they have tremendous tax advantages. There's also, trust accounts, or I'm sorry, custodial accounts we can do if it warrants that. If that's the good avenue to take. But the simple answer there is, and I do it myself for my own grandsons. Just a little bit of money every month into a plan, so that one day when they're college age, they can use the money for computers or car, something.
Even just gas, right? To and from. It's hard for those college students these days. College is so expensive.
Yeah.
Not getting any cheaper.
Right. And, we all hope that our children, grandchildren get that full ride scholarship for baseball or football or track and field or whatever. But the reality is we better plan for the fact that, even if they go to a local community college and they live at home, there's going to be expenses,
Sure.
Absolutely.
And a 529 plan just allows you to, control the money, control how it's invested, but also grow tax deferred and have tremendous benefits when it does come time to use that money, amongst other things.
So can I ask you a quick question about insurance? Because that's your other hat that you wear, I guess. You have strategies that you use for agriculture, small business when it comes to insurance? How do you help those people with that aspect?
Well, at this point, all I can do is be a sounding board for the insurance aspect, except for life insurance. We don't offer traditional insurance through Edward Jones. We stick with the finance side, but I have a considerable amount of experience with the property and casualty insurance industry. So I'm always a good, I'm a pretty good sounding board for those who have general questions. And probably the best thing I can offer, besides, just generalities, would be, I do know agents who are still working very effectively in that space.
Okay.
And of course, there's the Florida Farm Bureau, which most farmers, ranchers, and agricultural oriented people know of them. They do a good job. Now, when it comes to life insurance, of course, Edward Jones does offer both traditional style life insurance and variable life insurance. And there's a lot of tricks we can do with life insurance now. It's not the life insurance of the old days. I mean, there's without without getting too high into the weeds, there's single premium life insurance. If you have a lump sum of money, you want to pick up, you want to know what's most effective for the family to do with it. You can invest that money in a variable life insurance product that has death benefits.
Okay.
There is life insurance now that has long-term care benefits attached to it that can be used for long-term care. Life insurance has been evolving over the years. Like when I first started in the industry, back in the 90s, it started getting more interesting. Now it can be very effective. We can design things specific to your needs as far as some of these variable products, and they do a pretty good job. I mean, it's interesting, it's detailed, it's nuanced, but you can do a lot with it nowadays.
Very interesting. Cool. So how often in general should folks out there who work with a financial planner be checking into this stuff? Is it, assuming you're not handling your own, right? Obviously, if you're running your own, calling your own plays, you're going to look at it quite frequently. But how about people who are just working with you and leading on Edward Jones to kind of lead the way and do the work? How often should we all be checking in, seeing what's up?
Yeah, definitely. And again, sometimes you talk to clients every month. Generally speaking, we have an annual review that's required.
Okay.
I mean, that's
At a
etched
minimum.
in stone. I would think for an active agricultural situation or business situation, we're going to talk at least twice a year.
Okay.
For a couple reasons. Number one, to make sure that we're staying within the navigational beacons of what you want to accomplish, and make sure that what we're doing is still in track with what your goals are. Now, that's at least every year. For businesses, business owners, and people who might just be getting started out on their journey with a portfolio, probably a little more often, sometimes every quarter, but at least twice a year, just to make sure we can still do things that make sense affordably, making sure that we can still do things that make sense according to what the current markets are, and also making sure that we're staying on the path of your long-term goals.
I suppose
I would say twice a year, at least twice a year, generally speaking.
To me, if I'm working with someone, the market's changed, but my situation, especially if you're, a business owner, a farm person, agriculture, rancher, your situation changes too, right? And sometimes you might not realize it without talking to someone who can, someone like yourself who has the experience that maybe can see something coming up, right? And so I see that's the benefit of having an Edward Jones advisor like yourself, is you can guide and hopefully predict a little bit market side, but also, checking in with the person helps guide how you want to help them. Is that fairly accurate?
Yeah. And professionals, generally speaking, and agricultural professionals, agricultural owners, whether it's a part-time beehive keeper or a full-time citrus tree grower, farmer, you guys have a specialty. You know what I mean? You guys know your industry, and by the way, just talking to Chris and Ann at some of these farmers market we do is an amazing. It's amazing to learn how detailed they are in what they do. So you can't expect somebody to play all the positions on the football team. We have to have some specialists. We have to have somebody who can catch a ball. We have to have somebody who can run a ball. We have to have somebody who can block. And that's why sometimes talking to a financial advisor will not only for their stock picking expertise or their account opening expertise, but just to get the generalities of what's even available out there. What can we do? What is available besides just getting on an internet website and buying a few shares of penny stocks? We take a conservative approach. We take a long-term approach, and we take a very you-oriented approach in that we're going to find out what Chris needs specifically, and it has nothing to do with anybody else. And that's what an advisor brings to the table is, hey, this might be a really good idea for you. Oh, I've never heard of that.
Right.
Well, that's what I'm here for. That's what we're trying to achieve.
Nice.
So with people listening to the podcast today, how do they get started? I mean, it's a lot of times you don't think you have enough to get started. How do you direct them or let them know that we have things, and where do they have to be in order to get started in working with you?
Yeah. Beautiful question. And that is basically a relatively simple answer. Dollar cost averaging. $100 a month into a mutual fund, $100 a month into your Roth IRA or your traditional IRA, okay. $250 a month, $500 a month, $50 a month into a college savings program for your grandchildren or children. You don't need a lot of money to get a program started. You don't need thousands of dollars. There is no $10,000 minimum requirement to do business with me.
Okay.
We will set these up on just get an account open and throw money in when you can, just like a savings account at a bank. If you open an account with me, whether it's a mutual fund or an IRA or one of our managed money accounts, you can add to it when you can. It's flexible. Now, we like to recommend what the term dollar cost averaging, which is basically just buying, investing periodically, regularly, like every month, every quarter,
okay,
into the program. So what's very powerful about this, and there's all kinds of studies and there's all kinds of brochures, but when you invest in a program using dollar cost averaging, whether it's a mutual fund or stocks or annuities or whatever the case may be, you're buying more shares, right? Let's just use $100 a month. You're buying more shares when the stock market is down, right? So you're getting more of those shares. Or for the same $100 a month, if the stock market's up, you might be getting fewer shares, but the stock market's up. So it's a good thing. So generally speaking, as the years roll by, you're getting effectively more shares by dollar cost averaging, as the math tends to work out, by investing periodically monthly, because you're buying over the years when they're high, when they're low, as the market goes, you'll end up with more money or more shares by doing dollar cost averaging, as opposed to trying to time the market. Like, ooh, the market's down, I'm going to buy now. Or, ooh, the market's so high, I'm going to sell. Or I'm not doing anything. But when you just do a disciplined periodic investment program, especially if you have a few years to retirement or until you need the money, like if you want to just build up a lump sum of money to pay off a house or a ranch balloon payment, that sort of thing. So definitely easier than most people think to get an account started with Edward Jones and just start plunking money into it for your long-term savings.
Interesting.
I will say we also have, I will say we also have, for your short-term savings programs, your short-term needs, We have money markets that are very, very impressive right now. Much different than the money markets at banks.
Right.
So if you have money that you're just parking, like, oh, I got 20 grand here, or I got $2,000 here. I might need it in 6 months because I need a piece of equipment, or I want to pay off a credit card, or I'm going to Europe for the, summer vacation. So I'm going to need that money, but I don't want to earn, what the bank's paying me. I want to earn a little more. There's got to be something out there. Well, there is, and the money's safe. It's not exciting. The shares of a money market don't go up and down. They just stay steady. They were $1 a share 20 years ago. They'll probably be $1 a share in 20 years in the future, but you earn the interest. So for the short term and for money that you might need access to pay off bills as they come in, for example, we've had businesses that kind of use it. They'll pay off a loan or an equipment bill that comes in, and they'll just take it out of their money market. Boom! It just goes right back to your bank account whenever you say. So it's a good place to park money for a business or an individual that will earn you a little bit more than the average money market out there, and very simple, very quick, no fees, no commissions, just a good place to put a few bucks for the short term.
I'm thinking for a farmer, what's their biggest expense every year is fertilizer, right? And you typically will buy that late winter, right? Early spring. And so that's a perfect notion that if you've got, you're going to save enough money to spend that expense, you're not going to hope you get it a week before you have to fertilize because you might be out of luck. So as you're socking that away, knowing you have to buy $20,000 worth of fertilizer come spring, that would be a really good way to do that, because you're getting some savings, but there's no monkeying around with, fees and
right.
taxes and all that stuff. So that's
no commissions that you have to pay, and wait for the share price to come back up to cover the commissions. No annual fee involved. So if you've got an expense of 20 grand coming up in November, and it's March, and you're like, oh well, 6-7 months to just let my money sit and do nothing. We have an answer for that, in that it will get you some growth, interest wise.
Typically
not sure
better than
interest wise. While you're waiting and it's doing something.
Better than the banks and better than a coffee can, right?
Right. I've used it many times for many various reasons. Sometimes it's paying a house off. Sometimes you sold a house and you got $200,000 from selling your house, but I need another house. I got to buy another house now. And then while they're looking and while they're shopping and while they're putting together the next deal for another house or whatever the case may be, that money is sitting there. It's not really at risk as far as the stock market volatility or anything. And
interesting.
And it's there.
So people who, I would guess that'd be a good tool for people who flip things like houses or move equipment, right? Buying and selling tractors, large machinery. That'd be a really nice way to, because you're spending 1 month and you're selling another, and keep that all kind of growing and moving and not stagnant.
Yep. And happens a lot. So, and I am personally, as an advisor, more than able to do that and assist in that process.
So what's one thing, Rocky, that listeners out there, what's a small, if there's people who are doing very minimal or nothing financially, maybe you're stuck, maybe you're a little bit apprehensive. What's something small that a person could do this next week or two that's listening that could help them towards some financial health and wealth?
Beautiful. I would say it's not as hard as you think. Give me a call, quick conversation. we can open an account. It doesn't have to be fancy. It doesn't have to be anything more than that money market we were talking about, for example. It could be a mutual fund. It could be a money market. It could be managed money. But just get started. Get the account open. Put $250 in it. Put $500 in it. And then make it a priority for your own self to pay yourself in the future, right? By putting in what's easily affordable. I'm not asking you to not go to your nights out or to miss out on life. But generally speaking, if $100 comes out of your checking account on the 15th of the month after you've been paid, a lot of times you're really not going to miss it, right? So just get the account open, just like that first day at the gym, right? If you can just get in there that first day or that first afternoon walk after, I got to start walking. I got to get something going. So once you do that first walk, a week later it becomes a habit. Now you really can't wait to go do your walk, or you really can't wait to go do leg day at the gym, right? So,
Yeah.
Or, so once you just get started, you've got an account open, you've got your online access, you can open it up while you're drinking your morning coffee and see how your funds are doing. Or after dinner, you can go in and check your accounts. You say, oh, not so bad. Put another $100 in, or another $1,000 in, or whatever is comfortable. Because like I said, we don't want to dig into your personal needs, but one of your needs is long-term financial planning so that you have something someday. And we talk about the runway. Some people, when they're young, they've got that long runway, right? They've got 30, 40 years to retirement. It's a lot easier for them to pack away $1 million than somebody who's only starting in their, late 40s, early 50s.
Sure.
They've got a shorter runway. So the earlier you get started, better. I love working with young people. I think that it's a much easier conversation to say, hey, if you stay on this track, by the time you retire, you're going to have 850,000 or 1.2 million. It's a lot more fun to talk to somebody who's just getting started than to have a hard conversation with somebody who's in their 40s or 50s and say, okay, well, to get here where you need to be, we really need to tighten up.
Need to do some work.
Well, buckle down.
I like that. I like that what you said. Make saving some money a habit. Because I think everyone can relate to that. We all have good habits. We all have bad habits. But we all understand them, right? So if you can get that mindset where it's like brushing your teeth, right? You just do it. You don't worry about if it's right, wrong, or otherwise. It's what I'm doing, right?
Yeah. And if it gets on an automated thing, you just let it happen, don't worry about it. You've got 20, 30, 40 years to retirement. Let the market do its thing, let the growth happen. There's going to be ups and downs. I like to use the analogy of a yo-yo. And it's a good thing I don't have a yo-yo right now because I'm not very good. But if you watch somebody up close with a yo-yo, it's going to go up and down, right? And if you look at the market like that daily, oh my gosh, that yo-yo. Mm-hmm. But if that person's on an escalator and they're going up the escalator, right? But they're playing with a yo-yo. If you're standing right next to them, that yo-yo looks like it's going up and down. Crazy. But if I'm standing on the floor and I'm looking at that person with a yo-yo on the escalator, well, they're going up. Generally speaking, they're going up. Yeah. So, and that's the kind of hopefully mentality and discipline we can portray to folks that yes, there is some volatility, but not doing anything is pretty volatile as well. Just leaving your money set in the coffee can or in a checking or savings account, it's volatile because you're going to lose purchasing power one day due to inflation. inflation at 2.5%, 3% a year, if we're conservative, you're going to lose purchasing power. So it's a necessary discipline, and you don't have to do it alone. We can, when we start talking personal finances and investments, it gets a lot more detailed in person, right?
Yeah. Very good. So we're getting pretty close to time. It's about time to wrap up, but Rocky, if you want to give us any final word. You've given us a lot of nice words of wisdom as far as financial planning. I enjoyed it. Do you have any last bit of advice you'd like to say to the listeners out there as we wrap up?
Yeah. And I think actually I just talked about it just a second ago, is it doesn't have to be scary investing or opening an IRA account or a Roth IRA account. It doesn't have to be overly dramatic. You don't have to take a loan out to invest, right? Just a few bucks here, a few bucks there, get started. Now, if you're a little further down the line, obviously that conversation would be for someone who hasn't ever started. But if you do have some dollars laying around and you want to make some good common sense inquiries, please give me a call. We'll let you know what your options are. And I guess the advice would be, it all starts with a conversation. Just a real quick, hey, I'm Rocky. Nice to meet you. How can I help you? And what are your goals? What would you like to achieve? We talk about it, and then we do something that everybody's comfortable with. Just taking that first step is probably the hardest of all, but it's easy. Fun. It's fun.
That's great.
Yeah.
That's great. Awesome, Rocky. Well, thank you. That's about all the time we have for this episode.
Well, I appreciate you both very much. And I also want to say I really do appreciate the work that the Green Genes Foundation does. I think that it's absolutely penetrating lives and, making impact on people, whether they're, farm owners or folks like my daughter who's got a little cottage bakery. You know what I mean? It's just assisting, helping people. And that's what we're all hopefully here to do.
We're out there for everybody.
Yeah.
Okay. Well, thanks for watching.
Thank you.
Thank you, Rocky, for joining us. And be sure to watch us and follow us and share and join us again as we grow in the food, as we grow in the knowledge about the world that feeds us.
Thank you.